Hey, there is something very exciting going on right now in the world of real estate. Over the last 10 years, there has been an incredible increase in the attention of the sector. More and more people are taking money out of the stock market and putting it in their own control. But what most investors need right now is a due diligence checklist that they can use before making their final decision. And that is exactly what I created with my ebook, 111 Questions Investors Should Be Asking. You can actually get it right now at cfcmentorshipprogram.com/questions. It's literally a list of 111 questions that I ask before investing in each deal. Again, that's cfcmentorshipprogram.com/questions. Oh man, so excited to have Doug Casey back on the program today. We jumped into a ton of topics, like you always will when you talk to Doug Casey, the most interesting man in the world, and really excited to get this content to you guys. So first of all, Doug is in the process of writing 7 fictional novels about an international speculator. So we talk about the process of actually writing those books and also the themes that keep coming up in the books. Probably very, very interesting. Make sure to check those out. We also discuss something that I've been really fascinated by recently, which is corporate debt. It's a very interesting topic. It doesn't seem to be related to real estate, but the likelihood that the corporate debt bubble will create some significant challenges to the US economy is very, very significant. The percentage is very high. And if there is some big challenge with corporate debt, there's going to be a big challenge with the economy. So what would that mean for the US economy if we do have some massive restructuring or default or even a rise in interest rates? It's going to create some interesting dynamics. And I think that the recession-resistant assets are well positioned to take advantage of those dynamics, but important to understand what's at stake. And we're going to talk about the appeared disconnect between the stock market's quasi-highs and the population's general sentiment, which is not at all-time highs, I can tell you that. So very good stuff, very interesting interview. Really looking forward to hearing the feedback. Now, as I mentioned at the beginning of the program, we do have our ebook available now. 111 questions passive investors should be asking. I've already gotten a ton of thank you emails about this, so much appreciated. You can get a free copy of that at cfcmentorshipprogram.com/questions. Literally, the questions I ask before investing in each deal. And it's really good to see because I've exchanged emails with people who've asked these questions. You can get a very clear understanding of the deal by just simply asking these questions and also having a good understanding as far as what the answer should be. So the 111 questions are a great template. In the mentorship program, we actually go through the content. So if you're interested in applying there, go to cfcmentorshipprogram.com and apply. There's some testimonials in the application process, and you have an understanding as far as what the program's like. All right, hope you enjoy the episode. How's it going, everyone? Our guest for today is Doug Casey, who is best known as a speculator, economic commentator, and author of 7 books. His first book, The International Man, sold tens of thousands of copies around the world. His second, Crisis Investing, was on the New York Times bestseller list for 29 weeks, including 11 weeks at #1. And he's actually currently completing a series of 6 novels. The first, Speculator, which was released in July of 2016, the second, Drug Lord, in 2017, and the third, Assassin, which is actually coming out in the summer of 2020, not too far away. He also runs theinternationalman.com, and he's been a guest previously on the show, episode 25. That'll be available in the show notes page. Doug, thanks so much for joining us.
It's a pleasure, Hunter. I'm speaking to you at the moment from my farm in Uruguay near the beach.
Fascinating. You know, this is one of the things that I wanted to talk to you about just immediately. I know that travel's such an important part of your life. You've been to 155 countries. How has your life changed since there's been such a collapse of international travel over the last couple of months?
Well, just about every country in the world is locked down. It's insane. It's unnecessary. It's destructive. So it's changed a lot from normalcy, not just my life, but everybody's life. And the changes are just starting, actually. But out here on the farm, I've got 1,000 acres on a river close to the coast, surrounded by dogs and horses and cows. Things haven't changed much at all because if you live in South America, you can afford a staff to make your life quite convenient.
Pretty remarkable. So I actually am very sympathetic to that. And I think a lot of people in America are, even if they're not living in South America, because there's been a drastic move outside of city centers. And once you get outside of the city and just basically, the typical phrase, draw a line in the sand and focus on, your own home, the things that are going on outside in the media, the things that are going on outside in the streets even, don't really play that big a role in your life if you have goats to tend to, for example. What are your thoughts on that?
Well, during the northern summer, which is to say now, right here in the southern hemisphere, we're of course in winter, but during the northern summer, I've always lived in Aspen, Colorado, which is a little people's republic with its own culture. I'm glad I'm not up there this year because Aspen also has turned into a totally different town. My Friday lunch group that I always went to with about 30 other guys canceled. My Monday poker group canceled. The Aspen Ideas Conference, usually with bad ideas, but still interesting, canceled. The food festival canceled. The music festival canceled. So, and this is Aspen, which is probably about the richest town in the United States. So, this is really quite serious. I'd hate to be living in an apartment in Manhattan and not able to go out. The psychological consequences of this for many, many millions of people are far more devastating than the consequences of COVID, which, in my opinion, although it's a serious disease, if you're old and or fat and or sick and you get it, it's very serious. But it's 90% hysteria. So kind of sums that up, I guess.
It's been pretty remarkable. The media has taken the opportunity to do something the likes of which I didn't think I would see. I mean, I think a lot of people go through internal shifts in their perspective of the world. This has obviously been one for me. And it's pretty remarkable. I mean, it's unreal. And I think the negative damage in terms of the mental state of people is obviously very clear, especially in the United States, where you're seeing an unparalleled amount of social unrest for a lot of reasons. And what can you say? I mean, who could have predicted this except for all the people that were doing that exact thing, screaming over and over again? I want to kind of talk about the economic implications of some of this and what your thoughts are. And I know you've been working on a book, and I'm not sure if the fact that you're writing and obviously working through this kind of tie those in together. Has this situation changed the outlook of how those books are being written? And what are your thoughts on, how can it possibly not impact your worldview unless you've seen it all, which it's very possible that you may have?
Well, this is one reason why I've decided to go to writing novels as opposed to nonfiction, because there are many things that you can say in the form of fiction that you had best not or even dare not say in the form of nonfiction. And of course, this novel that'll be out in the third one in the series, tracing our hero, Charles Knight, from the first book, Speculator, which is about the gold mining industry and a fraud in Africa and a bush war in Africa, to Drug Lord, where I go into the consequences of the insane war on drugs. In both of these things, Charles makes a couple $100 million. In both cases, the government steals it from him and puts him in jail at the end of Drug Lord. Now, in Assassin, he's decided that some people just need killing. Now, interestingly, with the country totally polarized between people that hate Trump and people that love Trump, I'm sure this book is going to get a lot of buying from people that hate Trump because they're going to think Assassin it's a book contemplating and exploring and actually kind of endorsing political assassination. So they can say, this is all about killing Trump. It's not, actually. I think Trump is very problematical from many, many points of view. He's an economic ignoramus, except for the fact that he's deregulating. One great thing he's doing, but everything else is slapping on duties promiscuously and unpredictably, his support of 0% interest rates, creating trillions of dollars. I mean, these things are disastrous. So anyway, this book, Assassin, talks about everything about political assassination. It's not about Trump, though, because frankly, come November, I don't think Trump is going to be reelected. I predicted his election correctly in 2016 and made a money bet on it, which is the only kind of bet that counts. But this time, I'm afraid Trump is going to lose. And it doesn't matter whether Biden or Trump wins, the other side is not going to accept that person. So we're actually on the ragged edge of a civil war as far as I'm concerned. This is catastrophic. It's the biggest thing that's happened since 1860 in the United States. Bigger than World War I, bigger than World War II, bigger than the War on Terror, what's coming up here.
Wow. Okay. So that's obviously a huge statement. So let's circle back on that. Part of me is sympathetic to the view that this is very predictable in the sense that the bigger the government is and the more services that it provides and the more money it gives out and the more regulation it oversees, you're going to see more force of other people being instilled from a top-down environment from the government. And when you do that, and especially when it's 300 million people you're talking about, you're going to have people that have different ideas that feel like they're getting forced into different things, whether it be education or medical services, et cetera. And as the government grows in size and as the population grows in size, and there's a huge difference between people living in Wyoming and people living in Manhattan, you have a big, big problem on your hands. And the growth has really facilitated that. Do you see a way out of this? I mean, I'm hoping civil war is not really on the table, but I could see a way in which secession could be. How do you feel like we get out of the situation? Because I completely agree.
Well, I think secession is the most logical and the best thing that could happen at this point, because we no longer live in America. America was an idea and an excellent idea, but America's gone. It's been replaced by the United States. And the United States is just one of 200 other countries covering the world. Not much difference anymore between us and the other countries. There used to be a huge difference, not anymore. The United States has turned into a multicultural domestic empire. And as you pointed out, you've got some people that want radically different things from other people. And they all want the other guy to pay for what they want. And they all want to impose their ideas on other people. So this can't go on. The best thing to do is for the country to split up. The problem is if we have a civil war, that is defined as a war where two or more opposing groups are trying to take control of the same government and control everybody else. Very, very nasty. A war of secession makes much more sense. It doesn't even have to be a war. The United States could break up like the Czech Republic and Slovakia broke up very peacefully, amicably, 15 years ago. Could break up the way Yugoslavia broke up into 6 different countries. It could break up the way the old Soviet Union broke up into 15 different countries. Lots of examples of this type of thing. But it's somewhat unlikely in the U.S. So I don't know what form this is going to take, but what we're seeing now is an overture. And it's going to get more serious as November approaches. And the people that hate Trump, who really want to overthrow the substance of what remains of America, and the people that like Trump, they don't understand the economics, but they like the fact that he's a cultural conservative. In other words, they like the America that seemed to exist in the days of Ozzie and Harriet and Father Knows Best and Leave It to Beaver. And, well, that America's gone. But we don't like to see it still there with prosperity. But the world is changing rapidly, and not for the best. The next 10 years are going to be characterized by what I call the Greater Depression, because it's going to be much more serious and much longer lasting and much different than what happened in the 1930s and 40s.
Interesting. So I want to double click real quick on the books, because I feel like I see where the train is going regarding he was a speculator, he was a drug lord, now he's an assassin. And you mentioned that the character tends to move toward more and more radical professions. Assassin's kind of the top of the list as far as I'm concerned, depending on the content, I guess. But can you give us any insight into where this is headed, or is that confidential?
No, happy to. It's a series of 7 novels, and I hope that the listeners will reach out to Amazon or go to highgroundbooks.com if they'd like a hardback. But after Assassin, which is basically about taking out bad actors and point targets, we would say, the next step is he's accused of being a terrorist. And I've got a lot of views and done a lot of thinking on terrorism, which is a method of warfare. It's like cavalry charges or artillery barrages in many ways. It's a method. So you can't fight a war against terror because you can't fight a war against artillery barrages. It's the same thing. It's ridiculous. But after he becomes a terrorist, supposedly, but of course, you know the old saying, I'm a freedom fighter, you're a rebel, he's a terrorist. After that, he goes back to Africa, where he is well known, and a lot of things have happened in Africa where he goes back to, and he becomes a warlord. And here, I'm trying to reform the unjustly besmirched occupation of warlord. You don't have to be a bad guy if you're a warlord. You just have to be a guy that controls a private military operation. So he takes this country in Africa called Gondwana and changes it from a shithole into Singapore on steroids in 10 years. And that leads to the next book, Antichrist, because the natives think that he's God. And if you're God, what do? Well, you got to give people a religion. That's what gods do. That should be quite an interesting book in many ways. And then it goes to the 7th novel, which is called Apocalypse, which is basically about, I'm not going to say the end of the world, but let's say the end of about 80% of the people in the world. And that's going to be kind of a cute book. So anyway, that's what I'm doing for the next few years. I might do another nonfiction book. I don't know. We'll have to see. But the days are too short.
Well, the days are short when you've been churning out these books. I mean, 2016, 2017, 2020. So much appreciated for all that hard work. So in the previous conversation, we were talking about quantitative easing. And I thought it was pretty interesting that prior to Trump being elected, he was not a big proponent of the Fed's actions and felt like Obama was blowing a massive bubble into the economy and into the stock market and was drawing the same comparisons that someone like Peter Schiff might draw. And then as soon as he has the reins of power, now all of a sudden quantitative easing, zero interest rates, and infinite money printing are necessary. How do you see this plays out? And how does this tie into your current view on what's available in terms of investment strategies out there?
Well, of course, the reason this has happened is that in many ways, Trump has been captured by his enemy, the deep state. That's on the one hand. On the other hand, he can probably see, even though he doesn't know much about economics per se, that if they stop printing money at this point, the whole structure is going to collapse. The whole house of cards is going to come tumbling down. So there's no alternative but to try to prop the house of cards up for another couple stories and hope it doesn't come down when he's in office. It's going to be a nightmare for whoever's in office next, because the whole world revolves around governments these days. People look to governments to solve their problems, to do everything. The whole way of looking at life and politics has been totally corrupted over the last 100 years by the concept of government and democracy being the answer to all that ails the world. So all these people know how to do is pass more laws and more restrictions, which they have to finance with more taxes or more debt or more inflation. But we're at the end of that road. The only answer to the Greater Depression, the only solution to it, I should say, is complete deregulation of the society and the abolition of the income tax and other taxes, which all came up in the last 100 years, incidentally. But if you did that, you'd have to default on national debt. Well, okay, let's do that. Because unless you default on the national debt, the next generation of Americans are going to be turned into serfs in order to pay it back. And that's a very bad thing. And also, I'd say that I'd like to punish the people that have financed the government doing all these things, people that wanted money. So there's another argument for defaulting on national debt. And that is, if you have a 100-story building that's about to collapse, it's better to bring it down with a controlled demolition than it is to let it just fall randomly. But who knows what's going to happen? They're going to default on the national debt, but they're going to do it in the worst way by inflating it out of existence. And since the average American, and most other people in the world actually, do their savings in dollars, if the dollar is destroyed, everybody's savings are destroyed. And there goes the bond market, and there go pension funds, there goes the stock market. I mean, this is a real serious thing we're looking at.
Let me ask you a question about the money printing and then the implications of that, because I do agree that we're not headed to money printing equals great economic growth. I think the argument is very much the opposite. More money that's printed, the higher the interest payments on that debt, the more money that's taken away from efficient businesses and people's voluntary exchanges and put into government programs or even paying for the government debt. But we've seen this take place in other countries, and the show has been able to go on and on and on without them having some kind of hyperinflation. You typically see just a drastic reduction of growth. And I guess the Japan model, for example, is to hammer GDP growth, but they avoid, at least they have so far, avoided massive inflation or a collapse of their currency, for example. What do you think about that? And how do you think that may play out in the United States or in Japan, if you have thoughts on that particularly?
Okay, that's a very well-made point, Hunter. It doesn't have to turn into something like Zimbabwe, where I've spent a lot of time over the years, incidentally, or Venezuela, where I've also been 3 or 4 times over the years, which is more than most people have. It doesn't have to get as bad as that. But one of the problems that we have that are unique to the U.S. is that our major export for the last 30, almost 40 years now, hasn't been wheat or IBMs or Boeings. Our major export has been dollars. And now there are trillions. How many trillions? Well, nobody really knows. Best guess, in between 10 and $20 trillion that are floating around outside the U.S. Foreigners don't have to hold those dollars the way Americans do. They don't have to use those dollars to trade with each other. And they won't in the future, incidentally. They're going to go to gold. But at the point when foreigners no longer want to hold U.S. dollars any more than Americans want to hold Argentine pesos, there's no reason to do it, those dollars are all going to come back to the U.S. to buy everything that dollars can buy here. Inflation could explode. So the U.S. what I'm saying is the U.S. is a little bit of a special situation. Yeah, we could stagger along the way Europe and Japan have staggered along, or for that matter, the way the Soviet Union staggered along for 70 years. But I think this is likely to be much more serious because of the export of dollars, which are going to come back to the U.S. all more or less at once.
Interesting. I'll have to do some thinking and researching on that topic. It's definitely something that's kind of caught my attention. I think, you mentioned the Trumps, for all his strengths and weaknesses, one of the things that he clearly is a great marketer. But I will say, regarding your comments about the upcoming election, I think the catchphrase of "Keep America Great" is going to age just about as poorly as possible. And I think it was poor up front, but now, given the situation we're in, a lot of people just talking about the GDP growth, you've seen completely unparalleled GDP collapse over the last quarter. Saw some numbers about 33% if you analyze it, which is just completely ahistoric. To have "Keep America Great" be the slogan there, I think you're basically running a massive advertisement through quantitative easing for gold and Bitcoin. How are you participating in those spaces, and what are your thoughts on how this QE play may turn gold into a really exciting opportunity?
Well, what's happening? Well, first of all, we've been in a gold bull market now for 3 years. Nobody's noticed it, actually. But as we speak, gold is about 1950 or something like that. It's no longer at giveaway levels, the way it's been at several times in the not so distant past. But it's going a lot higher because it's the only financial asset that's not simultaneously somebody else's liability. So I own a lot of gold. I own a lot of silver. But at this point, I'm most interested. But I own those things for safety, for prudence, for insurance, for savings. To speculate and take advantage of the financial chaos coming up, you've got to be out of the stock market in general. Because what happens to the stock market is just a question of how many trillions the Federal Reserve creates and how many of those trillions go into the stock market. I think the stock market's a bubble. The bond market's a hyper bubble. You have to go to gold, but how do you play it other than gold? Well, gold mining stocks. Nobody owns them. Nobody thinks about them. Nobody cares about them. Well, I understand that. Historically, gold mining has been a crappy 19th century choo-choo train kind of business. Who wants to play around in the dirt with big yellow trucks when you can sit in an office and play with your computer? But in the past, since gold was freed up in 1971, when it was $35 an ounce, we've had about 5 really major gold stock bull markets where the average stock, the average junior stock, I should say, has gone up 10 times in value. Some have gone up 100 times. A few have gone up 1,000 times in price. I think that's going to happen again. So that's what I'm doing right now, mostly financing as a venture capitalist, small gold mining companies. It's possible to buy a stock at 10 cents and see it go to $10. I mean, it'll happen again. It's happened many, many times in the past. So that's where I am. That's my advice. The problem is, Hunter, that learning the way the gold mining business works, there are about 2,000 supposedly gold mining companies in the world. Most of them really aren't. Long story. But getting into it where you don't know what you're doing is as dangerous as getting into investing in high-tech stocks where you don't know what you're doing. But still, it's a good time to learn. It's not too late. And that's where the money is going to be made.
When it comes to speculating, it's always about looking at things on a risk-adjusted basis. But at the end of the day, if you can take that step when everyone is disgusted by whatever it is, you can usually put yourself in a good position from a downside protection standpoint. So the reason I say that is that hotels and travel have been completely hammered by this. Do you have any interest in pursuing that sector, given your inclination towards some more speculative investments?
No, I'm actually not interested in hotels and travel because this COVID hysteria, and it's mostly hysteria, is going to have a very long-lasting effect on the travel industry generally. Number one. Number two, the travel industry has been supported by an artificially high standard of living that we've had in the US and the West generally for many, many years, financed by debt. The way it works is that, look, if I go out and borrow $1 million now, I can live very high off the hog for the next year. The problem is either I'm going to default on that debt, which means destroying the capital that somebody else has saved and lent to me so I could consume it, or I'll have mortgaged my future life. And that's what the whole country's done. It's done those two things: destroyed past capital that's been saved and mortgaged their future. And the travel industry has been a huge beneficiary of all this, where everybody goes everywhere and so forth. So no, I understand that airlines and hotels are very cheap right now, but I don't want to catch a falling safe. And that's the way I see these things, falling safes. Better to wait some years until they smash open on the sidewalk and you can just wander around and pick up the goodies from the safe that's already been smashed open. But it's too early.
Let me ask at least one more question about gold, because it's not something that I'm investing in, but I know that a lot of people are interested in. What metrics do you look at to find out when gold is cheap? You mentioned gold is no longer a giveaway like it was just a few years ago. What do you look for in terms of pinpointing when it's an opportunity to buy?
Well, let me start with when it's an opportunity to sell and work backwards, if I may. I've said for years that I expect to get out of all of my gold mining stocks and most of my gold when I see on Time Magazine's cover, if it still exists, a golden bear tearing apart the New York Stock Exchange. I think that'll actually come to pass. So that's when you sell, because that's when everybody is interested in it. Everybody wants to buy. Everybody is panicking into it out of fear or out of greed, or for that matter, out of prudence, rather belatedly. So that's when you sell. So when do you buy? You buy when there's no interest in it. Nobody's talking about it. When all the academic so-called economists say it's no more than a pet rock. Well, that's still where we are, believe it or not. The big fund managers don't own gold stocks. There aren't really any gold mutual funds out there. There are a few, but they're insignificant. Nobody buys gold stocks. Nobody cares about them. The public, nobody will talk about them at cocktail parties. So, yeah, we're not at the bottom anymore, but the top is still several years at least away, as far as I'm concerned. So it's a matter of psychology, number one. There are other indicators, like the ratio of the price of gold to, let's say, the Dow Jones back in, let's say, 20 years ago, the year 2000. It would take 40 ounces of gold to buy one share of the Dow. Now it takes about 15. In the past, it's been 1-to-1. Back in, this is ancient history, I know, back in 1980, it was 1-to-1 between gold and the Dow. So right now it's 15. I think it's headed back towards 1-to-1, or at least 5-to-1. So now's the time to buy gold, and it's still the time to sell stocks, I think. I mean, there's lots of other things that we could say, but those are two broad, general comments that I think are quite valid.
Yeah, I like that. And it's a metric that we can actually track, and it's objective, and it's not just, based on the whims of what others are doing, for example. What about corporate debt? This is something that has come up a lot on this program. I have always been a little bit fearful that that's going to be a real reckoning at some point, but it's very confusing because of the low interest rate environment, which itself has created the corporate debt bubble, may in fact allow the corporate debt bubble to go on for much longer than even I can foresee. And then you add to the fact that the United States federal government and the Fed are actually buying specific corporate debt for the first time in U.S. history. What do you think of all this, and how is this going to play out, given what I think you agree with is this perpetually long, low interest rate environment?
Yeah, it's a potential disaster in the making. The most important signal that anybody gets in the economy is interest rates. You'll do things at zero interest rates that you will not dream of doing at 20% interest rates, okay? And of course, it's a continuum along the way. Look, corporations in the US today are, as a whole, mismanaged. Most of them now. They're not run by the founders of the corporation that were interested in building businesses and creating wealth. That's what entrepreneurs and founders do. Now, all the corporations are run by managers, people that have been to an MBA school and have gained all kinds of ridiculous economic ideas. They don't have any skin in the game. Their shares were granted to them as bonuses or options, and their interest is not in building wealth and a business. It's in jamming the share price up so their options are worth something. I'm not kidding. This is why corporations have bought trillions and trillions of dollars of their own shares in recent years with borrowed money. Sell a bond at low interest rates, use it to buy the shares, jam the stock price up, and become a multi-zillionaire if you're a manager. That really is the way the game works. And once again, it's a shell game. It's a house of cards. It's a disaster in the making.
What do you think pops the bubble, given that if the Fed's going to continue to print money, these corporations likely have the ability to continue to make those payments.
Well, to start with, since the average American is shown by the debt on his house, the debt on his credit cards, the fact he can't even afford to buy a car, he's got to lease a car. It used to be you bought a car. You just saved up and you bought cash. Bought a car for cash, incidentally. This is ancient history to most people, but that's the way it used to be. Then there was 2-year financing, then 3-year, then 5-year. Now it's 7-year financing. Even that's too expensive. People have to lease their cars. So that a car goes from being a small asset to a large liability. This is true throughout the consumer society. So sure, it's a debt bubble that we have everywhere. And the standard of living is going to fall significantly. Now, what does that mean to corporations? It means that people are going to buy less stuff. That means earnings go down. It means more, they're going to have to fire a lot of superfluous employees. It's not just going to be in the restaurant and hotel and airline businesses that there are going to be a lot of employees that get fired. It's not going to be your pool boy and your gardener is going to get fired and your masseuse gets fired. And these people are all going to have to find something else to do. Now, that shouldn't be a problem in a free market society, but it's going to be a big problem in society the way it's currently oriented. They're going to look to the government to kiss everything and make it better. But earnings of corporations are going to collapse, most of them. Few exceptions, like these companies like Amazon's profited, Apple's profited, Google's profited because everybody's staying at home and playing with their computer all day. But this is a fool's paradise as well.
I really like one thing you said in this conversation, which is that a bet for money is the only kind of bet that matters. And I completely agree with that. I have a background as a poker player and definitely understand the difference between, I bet you this and I bet you this $500. So what are you making your bets on right now? You mentioned the gold. Are you shorting anything? If so, what? Are you long anything? If so, what?
Well, as I said, most of what I'm doing is long gold stocks, long gold, and I'm including other commodities in this too. I think that as the world turns to become more of an electrical society, nickel, the element nickel, is going to become a big gainer of that. I'm long a lot of uranium because, contrary to popular uninformed opinion, it's actually the cheapest, the cleanest, and the safest form of mass power generation. So I'm in that. I'm in commodities generally. So gold stocks, commodities in various forms. I'd like to be short the stock market. I'd like to be short the bond market. But I don't know how long this bubble can go on. Another day, a week, a month, a year? I doubt a year. Well, anything's possible. But the problem when you're short is that in a volatile world is the market can stay irrational longer than you can stay solvent. So I don't need the aggravation. I mean, if I find a really sweet short opportunity, and there are a bunch, maybe I'll take a gamble. But no, I'm just sticking to the knitting. I'm just doing what I said. I own a lot of real estate, which is basically going to be a disaster, at least for the short run, because it floats on a sea of debt. And the debt market's going to be chaotic. So anyway, I see real estate. I own way too much of it, but it's basically a consumer good.
What kind of real estate?
Well, any kind at this point. We can talk about agricultural. We can talk about commercial. We can talk about residential. I'm kind of friendly towards agricultural real estate. I own a dairy operation down here. I own a cow-calf beef operation. I'm looking out my window, and I've got 200 acres that I could plant in soybeans, usually are, but I didn't do it this year because there's no money in growing soybeans or anything anymore. But most people have most of their wealth in their houses, and they see it's their major asset, and it's all financed. And one of the problems is that since local governments are all bankrupt at this point, they were bankrupt before, but now they're genuinely bankrupt because of the collapse of the economy, the fact they have to spend more, they're getting no tax income, et cetera, et cetera. They're going to raise taxes. And what does that mean? Sales taxes are going to go up, which is going to hurt consumption. But real estate taxes are going to go up even more because you can't hide a house. So that's going to hurt the real estate market. Not interested in it. Houses are expensive consumer goods. They're like cars. Well, they're like toothbrushes, except a toothbrush lasts a couple of months. A house lasts longer. They're both consumer goods.
Agreed. Yeah, we recently made the decision not to buy a residential property to live in and renting, and investing where it makes sense. I like the mobile home park business. I like the multifamily business. I like the self-storage business a lot. And I'm very much bullish on the senior living business. And right now it's going through a pretty interesting pricing arbitrage opportunity because of the concerns and fears specifically around COVID, given that the overwhelming majority of the people that have suffered the most have been older. But that doesn't take away the massive, massive demographic shift that's taking place in the United States. And you compound that with the massive, massive amount of interest in the sector, which creates a lot of liquidity and interest from investors to sell to later down the road. What are your thoughts on some of those?
Well, I think you're in the right place from my point of view. I agree with you. Looking at for instance, the storage business has been a fantastic place to be for years. So good decision on that. But will that change? People have so much crap. They've filled their basements, they've filled their garages, and then they had to buy storage units. I wonder if they're not going to liquidate a lot of that stuff. So maybe the storage business isn't going to be quite as good in the future as it has been. I don't know. Just a cautionary note. Trailer parks, another excellent place for lots of demographic reasons that I know you're very familiar with. But maybe, of course, you're just renting the pad. And if they don't pay the rent on their pad, then, they can lose their trailer and all this type of thing. But, a lot of people aren't paying their rent right now, or they're only paying their rent because the government gave them free money. So we could be facing a conundrum where you have to kick them out of their apartment or their trailer or whatever the hell it is, and they're out on the street, but the trailers or the apartment or the house stays empty. It's almost like a paradox. So, of course, at this point, having created a huge problem, and this is all done by the government's monetary policies and other policies, the government's going to step in, and it won't augur well for the landlord. So I don't know. It's a problem. And of course, we're all seeing what's happened to malls and retail businesses and office buildings generally because of Amazon and because of this COVID thing. If you can work from home, you do it now. It's going to be a new world. This bubble that's just burst, it's the biggest thing that's happened since what happened in the 30s and the 40s. In fact, the standard of living, and I know you referenced what the New York Times said about falling at the annual rate of 30%. I'd say that's about right. I generally don't believe government figures, any U.S. government figures, much more than I believe Argentine government figures. They're politically phonied up. But now it's a new world we're going to be living in. And we've just scratched the surface because there's things happen outside of the U.S. too. And that could be really serious. What's going on outside the U.S. that will also affect us inside the U.S.
Certainly. Well, we have covered a ton of ground, and I definitely want to have that international focus conversation. We talked a lot about the United States today, but I think we should do it again in 6 or 9 months, see how this thing plays out. But before we jump off, though, Doug, let the listeners know how they can learn more about your website and your upcoming book, Assassin, which I'm really excited to hear about.
Well, Assassin is because it's done now. It's really a very good book, very entertaining, and the story will absolutely grab you, and you'll learn a lot, not just about assassination, but about the things that lead up to assassination. So get a copy of that. It's on Amazon, or go to highgroundbooks.com. That's number one. And number two, I do a weekly piece on my website, internationalman.com, and some other really first-class writers also do similar things about the whole investment waterfront, not just international stuff. So go to internationalman.com and pick up a copy of Speculator and Drug Lord and then Assassin next month.
Awesome. All right, Doug, thanks again for coming on. Much appreciated.
Yeah, it's been a pleasure, Hunter. Thank you.
All right, listeners, thanks for checking out the episode. As always, the contact information for our guest will be available in the show notes page, which is hosted on SoundCloud, iTunes, and Stitcher. Don't forget, if you want access to some of the free goodies that I'm talking about at the beginning of these episodes, like free ebooks, weekly investor emails, and articles about some of the most important investment-related topics, make sure that you have created an account with CFC because this stuff is automatically available. You can do this by going to cashflowconnections.com and signing up as an accredited investor. Of course, if you have any questions, feel free to email me at hunterthompson@cashflowconnections.com. Thanks again.